Gold just smashed through $4,400 an ounce, a number most people thought belonged to history books, not today's markets. And silver didn't sit quietly either. It hit its own all-time high alongside it. The world's biggest investors aren't chasing shiny bling. They're running toward it. Why? Because cash and traditional investments are suddenly looking shaky. When fears about global politics spike and big players start betting that US interest rates will drop, gold and silver light up. Safe havens are no longer a niche play, they're center stage. Here's the core of what's unfolding. Record prices mean something deeper than just another rally. Gold and silver are up more in 1 year than they have in decades. Gold's biggest annual gain since 1979, and silver's surge has more than doubled its value. That tells you markets aren't just optimistic, they're worried. A weaker dollar, geopolitical tensions from the Middle East to Venezuela, and bets that the US Federal Reserve will cut rates are pushing money into metals that don't yield anything but stability. Now here's the twist you might not expect. This isn't a crazy bull run born from hype. It's born from asterisk fear of currency weakness, fear of slow economic growth, fear of instability. When gold and silver rally this hard, it's a kind of market confession. Investors don't trust the usual anchors anymore. So take a breath and think about what that means beyond prices. When the world's top money managers are piling into metals instead of stocks or bonds, it's not just price history being rewritten, it's confidence. Because when fear is the fuel, records aren't the peak. They're the alarm bell. Gold at $5,000 sounds crazy. Gold at $25,000 sounds impossible. But history says it's not. Right now, gold prices look high on the surface. Records everywhere. Headlines screaming peak. But underneath that price is a quiet mismatch that almost no one talks about. The amount of money in the global system has exploded. Gold hasn't kept up. For decades, governments printed currency far faster than gold supply grew. Dollars, euros, pounds, multiplied. Gold barely moved. On old balance sheets, gold used to anchor money itself. Then that link was cut, but the metal never got repriced to reflect how much paper money now exists. Here's the core idea. When you adjust gold for how much currency has been created since the last time it was truly money, today's price doesn't look expensive. It looks cheap. Some historical comparisons suggest that if gold were valued the way it once was relative to money supply, it wouldn't be trading in the thousands. It would be trading in the tens of thousands. And this is where the shift happens. People think gold rises because investors get greedy. In reality, gold rises when trust erodes, when debt piles up, when currencies weaken quietly over time. Gold doesn't chase growth. It exposes imbalance. The most uncomfortable part. A massive gold repricing wouldn't mean gold suddenly got more valuable. It would mean money got exposed as worth less than we pretend. So if gold ever makes a move that feels impossible, it won't be a miracle. It'll be math catching up with belief. $25,000 for 1 ounce of gold sounds insane. $55,000 sounds like science fiction. But history says it's not a fantasy. It's a warning. Right now, gold feels expensive. Record highs. Everyone says it's already had its run. But zoom out, and you see the real problem. The global money supply has exploded over the last few decades. Trillions upon trillions created out of nothing. And gold barely changed. For most of modern history, gold wasn't just an investment. It was the anchor. It sat on balance sheets backing entire currencies. When governments printed more money, gold was revalued higher to match it. Then that system quietly ended. Money kept multiplying. Gold stopped being adjusted. Here's the core idea. If gold were priced today the way it was when it actually backed money, relative to how much currency exists, its price wouldn't be a few $1,000s. It would be tens of thousands. Not because gold became rare overnight, but because paper money became common. And this is the shift most people miss. A massive jump in gold wouldn't mean gold suddenly won. It would mean currencies finally lost the illusion of stability. Gold doesn't crash systems. It reveals what was already broken. So if one day gold hits a number that feels impossible, it won't be a bubble. It'll be history rhyming, and math finally telling the truth.